There are ample opportunities for investors in both public and private credit, but where should you be really looking to put your money to work? My guests today do have some ideas to share with you on this topic and some ideas for your portfolio. We're going to talk about that right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore. Thank you so much for joining me. I'm really looking forward to my conversation today. I have two guests in the studio, Alan Litt and John Christmas. Guys, thanks for joining me today. It's a great conversation. We're going to talk about senior housing, which I think is one of those unsung heroes of a client portfolio, and something maybe not a lot of our viewers and investors are familiar with. But I know that both of you are part of BlackRock in your own firm. So I want to get a sense, John, maybe you can tell us who's HPS, who's Monticello, and how are you working with BlackRock and, of course, our clients and advisors?
For sure. And by the way, thanks for having us. Alan and I are ecstatic to be here to get in front of this crowd. HPS is a name that institutionally has been known for a long time, but in the wealth channel less frequently, more recently. The firm was founded in 2007. Last year, we were purchased by BlackRock. We were, at that time, the largest firm of our kind, purposely built for alternative credit, from the people to the process. Like, that's what we do. We were acquired by BlackRock and now sit within BlackRock and oversee about $400 billion in assets. The private credit is a big part of it in interval funds and non-traded BDCs. We've got private equity, we've got special situations, we've got secondaries, and we have real estate. We have equity real estate and we have credit real estate. Monticello is the senior housing expression of that platform, so maybe I'll get turned to Alan for a second.
Yeah, Alan, I'd love to hear more about that from you.
Sure. So our firm was formed in 2014. This is our second vehicle with BlackRock. We have a long-standing relationship with the leadership at BlackRock. Our specialty is focused on the trend of senior housing. 30% of the U.S. population is going to be over 65 in just a few years.
Wow.
And 12% is going to be over 80. So it's a really important part of our economy. It's a really important part of the future of the United States. And we've been in the business for over 30 years, my partners and I, in the specialty space. So HPS is expressing credit all along. And when BlackRock came to us, they wanted a specialized product, very niche-y, very unique, sort of fixed income with a premium yield.
Excellent. And by the way, BlackRock has been a great partner to us at UBS, our financial advisors and clients, and we're great friends with Rick Reeder. Everybody knows Rick. He's just the man, the myth, the legend himself. So it's great to have you both join us as part of the BlackRock family as well.
Thank you.
So Alan, let me stay with you because you mentioned Monticello. We talked about your specialty in senior housing. It doesn't get a lot of attention, I think, in general. We talk a lot about housing, we talk about REITs, we talk about that market, but we don't really go specifically into that specialty part of the sector, which is the senior part. And we know that the population is aging, people are living a lot longer, so that's going to become even more and more important over time. Where does lending into that market kind of lead itself or show up as an income playbook for investors? How are you talking about this as an opportunity?
So the opportunity is there's a lot of people who've raised a lot of money for private debt into real estate. Our focus is really private debt relating to a demographic trend that's super strong. A lot of years we've been talking about the silver tsunami. It's here.
Wow.
We have buildings that are over 100% occupied. And the reality is that we need to create a product that we can offer to our community, the UBS community included, where it's providing them with a secure return, a strong fixed income return, but it relates to something that's need-based. So mom and dad need a place to live. They want it to be safe and clean, and they want to be with people like them. We understand that market, we operate in that market, and we've been doing it for decades. And we've been doing this specific strategy for over 12 years.
And the opportunities continue to grow in the space, clearly because of the need and the occupancy.
Correct. And what we've seen is you would call it the mom and pop operator,
right,
is sort of retiring, like the rest of our society.
They need a place to live too.
Exactly. And also, it is a business that takes daily activity to watch it. So they're creating transactions that we can look at and decide if we're interested for our clients, and we have about 80% of our clients are repeat. So our clients are looking to acquire them, fold them into their network, add services, renovate, upgrade, And so what we're doing is you're seeing a turnover in the population, but you're also seeing a turnover in the ownership.
It's incredible. It's an incredible market, and obviously, as we keep saying, that aging population, it's becoming more and more relevant and important. John, I want to kind of talk a little bit more about the opportunity that you're seeing. You talked about how you look at private credit, and that's been sort of a really important aspect of, even here, our Chief Investment Office does have alternatives as part of their allocation. So it's clearly something that our clients and advisors are looking at. We sort of heard a lot of talk about this blurring of lines when you kind of look at, public and private, or liquid and private. What does that mean in practice?
I mean, in practice, since 2008, regulations have come in that banks have higher capital charges to hold certain types of loans. Specifically, a $400 or $500 million loan to a private equity fund, right? And so what you've seen is the public credit markets have shrunk as private credit has grown, much like private equity. Many people know this story. Like, public markets have shrunk, they've gotten higher quality. If you want growth, you go private, or if you want some, other companies. You're seeing the same thing in credit markets. Because public markets have shrunk, you've seen yields compress. And if you want yield, then there's other places to go. Institutions are moving rapidly to private credit because where it sits on the frontier, higher returns, less volatility. But our good friend Rick Reeder, you mentioned Rick. Rick obviously buying loans, high yields every day, right? Mutual funds and ETFs last year, you can get 5 or 6%. I think the best returning, I think it was Eaton Vance and another did 5 or 6% last year. In an interval fund, which is 50% public, 50% private on average, get 8.5 or 9. In a BDC, you can get 9.5 or 10. Now they why? Because the public BDCs only have 10%, right? And so, but you are going to see. And by the way, if you listen to other firms, the heads, they're talking about moving investment grade private credit into ETFs and mutual funds. So, while we're talking a lot about non-investment grade private credit in this thing, I think people need to learn about private credit because it's not just going to stay over here. You're going to see it in mutual funds and ETFs and other places as it continues to proliferate. And it's being driven by the Fed not wanting it on banks' balance sheets. And they want it on insurance and pensions and sovereigns and wealth. And so we think that trend continues.
Yeah, and really become a part of the income producing section of your portfolio.
Exactly.
Right, and as you said, you made a really good point, John. It's coming up more and more and more in conversations, I'm sure, between advisors and clients, but even in this room here, it does come up in general conversations about opportunities in markets.
But like what Alan's offering is something different. There's so many different parts of private credit, right?
Yeah.
Like most of it just gets lumped into that 40% loan to value new private equity, which is what the non-traded BDCs are supposed to be. But there are multiple opportunities across real assets, triple net lease, senior housing, and so I think they'll see more options and they'll be able to be a little bit more targeted. And I think that's really what Monticello is all about, finding a targeted opportunity.
Right. Great. Terrific. And Alan, obviously there's a lot of focus on what's happening with rates. We've got potentially a new Fed chair coming with Kevin Warsh. If he's been nominated, but if he gets approved to be the new Fed chair and take, we still think there are going to be 2 cuts this year for the Fed. That's what our CIO is predicting. How do you keep duration in check? You're looking at the housing market all the time. You're looking at all the opportunities there, but still pursue, premium yield. What's the right combination? What's the right formula for that?
So we have 3 strategies when it comes to that. Number 1, our loan duration is typically 2 years or less. So we're always actively putting out money at the rates that are current with the current yields. So as rates will come down, spreads will naturally widen, maintaining our yield. The other thing that we do, which is unique, is we require every borrower to buy a cap and have a floor. Our job is to deliver consistent, non-volatile, non-correlated returns to investors. The way you do that is by creating a cap and a floor, and we're just sitting in the middle. And with a 2-year duration, it gives us plenty of time to see to the future. And we think those strategies, on top of exceptional underwriting, and the most important thing we do every day, pick the right operator. We're a specialized lender. BlackRock, HBS came to us because we're a niche. We're delivering a niche to the UBS family of clients. And what we're saying to those clients, we're specialized in this. It is a deep market. It's wide. There's a lot to do. We don't have to do everything. We have to do the ones we want to do. But there's a lot of opportunity, and we are known in the market for decades as a consistent player in the market.
Excellent. Alan, thank you very much. I still have a fantasy of me living in retirement in an old mall that's been converted into housing for Gen Xers like myself. So maybe that'll be my future retirement. Sort of seems appropriate, doesn't it? I have a fantasy of living in an old Gap that becomes a condominium. Anyway, thanks guys, really, in all seriousness, great stuff. Thanks for coming through, and thanks for sharing some of the opportunities with our viewers. Good to see you.
Thanks for having
Great.
us.
Alan Litt, John Christmas. And for more information, please visit our website at ubs.com/views. Lots of CIO content there. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook, as well as Instagram. We've got a dedicated channel for the studio there at UBS Trending, so please give us a follow. And as always, if you have any questions about what we just spoke about today, please make sure you're continuing this conversation with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, and remember to keep your eyes on what's trending. We'll see you soon, everybody.